Basically, today's objective is to introduce you with the system of taxation, right? We know that a lot of countries in the world have this system, and this is mainly the system through which a government earns money, right? So it's not basically the earning. They don't have this objective to earn money as, like, it's not like earning profits or anything like that. The point is they need to make some money to spend it, to spend on the general public, right? So it's like collecting from the rich and spending on the general public, which not only benefits the rich but also benefits the poor as well. Okay, so this is basically an overall this is basically, I would say, a reason why taxation system exists in the world. Right now, we know that when it comes to tax, this is the government, right? For example, now a government, for the government, this is basically revenue, right? But for individuals or for businesses, I would say corporates or businesses, right? It's obviously an expense. In accounting, what we study is that tax is an expense, right? This is what we study in accounting. Now, the point is, an individual or a company might earn some income. Now, that income could be through various sources, right? So, for example, they can earn employment income, right? When you're employed, you earn employment income, right? They can earn, let's say, income from self-employment, which is also called a sole trader business, right? A sole proprietor. You can also earn income from your partnership business. You can also earn income from property, right? You can earn rentals from property, right? Now, that property could be a residential property, it could be a commercial property, depending on the situation. The point is that ultimately you're earning rentals from the property, right? You could also earn, let's say, some pension income. That means you have a pension fund, right? And you've made some investments and you're earning some pension income, right? You can also earn some, let's say, interest income, or you can earn some dividend income. Now, these are basically various types of incomes that an individual can earn, right? Our syllabus mainly revolves around individuals. Yes, company taxation or corporate taxation is there. It's a very important part of the syllabus. But again, most of the questions come within the scope of individual taxation, right? And later on, when we obviously move along with the course, you'll know why. Now, these are certain incomes that an individual might earn, right? I'm just sticking to individuals right now, just to keep it on the basic side, right? And obviously, these incomes are taxed. Whatever income you've earned, you might get taxed. So basically, let's say, for example, you've earned employment income of, let's say, £1,000. Government might collect 20% on that as tax. Correct? What are you left with after this? £800, right? You as an individual earned £1,000 from your employment income, paid a tax of 20% to the government right away from whatever income you've earned, right? So this basically over here is called gross earnings, and this is net earnings, right? Now, I'm just trying to explain you different structures of taxation. You now obviously know what tax is, right? It's revenue for the government that the government earns, collects from you obviously as a public, and then spends it on you. So basically, for example, there are rich people in every country, right? They would tax those rich people on their income, collect the money, and they would spend on various areas, for example health, for example infrastructure, for example education, for example you know resources, for example the economic resources, for example trade, right? They could spend on different sectors, different industries, to promote the business, to promote exports, right? So they can do all these things. The point is, the only tool that helps them in doing this locally is taxation, tax revenue. Yes, there is another source as well. There surely is another source. I'm eliminating the business side of the government because there are certain business entities that governments own, right? So government owned entities or public sector entities, yes, they exist, and the government makes money out of it. I understand. I'm eliminating that. I'm just considering the money that they have raised from sources other than business, right? So number one, that could be tax. Number two, it could be borrowing. Borrowing means borrowing from the local banks, borrowing from the international banks, borrowing from the World Bank or the IMF, or let's say ADB or whatever it is, right? ECB and all these different reserves and different national bodies, right? So these are two main sources: tax revenue or borrowing. Right now, the leg that we are considering, or the leg that we're studying right now, is the tax revenue, right? So, like I said, 1,000 into 20%, that's just on one individual, 200 pounds collected from you, right? Now, you're left with 800 pounds, okay? You go out to the mall. Let's say you feel like doing some shopping, right? You want to go out and you spend money, right? So, let's say, what do you want to buy? Let's say you want to buy a shirt, right? Now, the shirt, probably the retail price of that shirt is, let's say, 100 pounds. All right. The retail price of that shirt is 100 pounds. Okay. And usually, government would like to collect tax on your spending as well. All right. Spending mainly on luxurious items. So, shirt, if you're buying £100 shirt, it's a luxury, guys. It's not a necessity. You could have gone to a cheaper store and bought a cheaper shirt, but you instead went to a store which probably sells you a shirt for £100, right? So £100, that means, let's say the government would like to tax your spending, because obviously only a rich person can spend, or an upper middle class person can spend this much money on just one shirt. All right. And these are the people from which the government would like to collect tax and then spend on the general public, right? So let's say the government would tax this as well at 17%, for example. Or let's take it, whatever the actual rate is, I'll tell you, 20%, right? Now, essentially, this shirt will cost you as a customer, I would say, cost to customer £120. This tax of £20 over here is also called sales tax, or value added tax. All right. Now, two taxes that we've looked at. Number one, tax on income, which is £200, and then tax on your spending. Can you guys tell me the difference between the two? There are a lot of differences. I just want you to state one difference, like any one difference if you want. You can unmute yourselves and you can tell me. By the way, I have this,
I'm sorry, I didn't get the question.
okay, I'll repeat my question. We've looked at two taxes, right? One was on your earning, The second one was on your spending. Can you tell me at least one difference between the two taxes? Any difference that might come to your mind? In the MENA region, right, in Qatar and all these countries, what type of taxation do you guys have? Is it the tax on
Um,
income or the tax on spending?
is it like direct tax and indirect tax?
Yes, yes, yes. That's one difference. You can obviously call it, and it's certainly called direct and indirect taxation, right? This form of taxation over here is direct taxation. Why? Because it's directly, the government is directly taking a chunk of your income, basically taking a chunk out of your income, direct. All right. This, on the other hand, is called indirect taxation. Why? Because the government is not taking directly a chunk out of your income. They're just increasing your spending by a certain amount, which obviously does not add any profit to the company or to the business you're purchasing from. Instead, it goes into the pockets of the government. All right. The main difference between the two, I'll tell you the main difference between the two, and note this down. Direct taxation will all you will always suffer a direct tax. I'm not talking about specific laws. And even if I were to be talking about specific laws, I would talk about UK law because you're studying UK tax, right? So, like I said, direct taxation will always exist. You will always suffer some amount of direct tax. But indirect taxation, you can avoid it. How? You don't spend on items that are subject to indirect tax. It's not like all items are subject to indirect tax, or it's not like all items are subject to value added tax, right? There are certain items that are exempt from sales tax or value added tax, right? There are certain items that are taxed at 0%, and there are certain items that are taxed at 20%, for example, right? There are different categories, right? I'll obviously okay, let me just give you a quick example, because we're right now trying to understand what taxation system is. So I'll just give you a quick example. Income, like I told you, there could be various sources, right? Property, hoteling business, for example, self-employment business, trading business, manufacturing business, employment income, pension income, right? All these types of different incomes, right? And all these incomes are subject to tax, which is direct tax, not indirect tax, obviously. Whenever you earn something, a government takes a chunk out of it and keeps it for themselves, right? Indirect taxation, on the other hand, depends on certain factors. For example, in economics, there's a term called negative externalities, right? All items or all things that have negative impact on the society. Yes, this is a term that there's something that you would have studied in economics if you have done that, right? Negative externalities are basically negative impact on societies. For example, cigarette, right? I'll just take a very common example because you know in there's no such country in which people don't smoke, right? So let's say cigarettes. Do you think this particular product has negative externalities? It has negative social impact? It does, right, guys? It has negative social impact, right?
Yes, yes, it
Right.
does.
Now, do
Yeah.
you think the government should tax it at 0%? Do you think the government should exempt it from taxation, or you think the government should tax it at 20%? I'm giving you three options: zero, exempt, or 20%. What should it be?
Or 20%.
20%. How many of you agree with her?
Yeah, I can say as much as can. It's kind of.
Exactly. As much as you can, so that this item for the consumer becomes more expensive and the attraction to buy it reduces. Because The more you're attracted to buy it, because the cheaper it is, the more you're attracted to buy it. And simple as that, because cigarettes create negative social impact. The government wouldn't want more people to smoke in the country, right? So to avoid that, the government might put on some extra tax on cigarettes, right? For example, the government wants to, there are three different types of taxation systems, mainly progressive, regressive, and basically flat, which is like straight tax rate on all the classes of income, rich, poor, middle class, whatever it is, 10% on everyone, right? Progressive is where you get taxed more when you're rich. So it's like the UK tax system is more progressive, right? The richer pay more tax. Simple as that. Now the point is, for example, if I want to, let's say, we have street bazaars, right? Some places have street bazaars, right? You have street vendors, and let's say people selling clothes on the street. These days we see that people selling masks on the street. There could be different street bazaars, right? Do you think vendors selling on a street bazaar, their product should be subject to indirect tax, or a person who has a shop in a hi-fi mall, let's say a Marks and Spencer store, or a Louis Vuitton store, or let's say a Zara store, these people should be, or their product should be subject to indirect tax.
The person who has a shop in a mall, a high-end
Exactly.
brand shop in a mall, should be
Exactly.
taxed more because they're earning more. So it's only fair that they're taxed more.
Again, the you what the point that you put out is correct, but the logic that you gave is, I would like to correct that a bit.
Yes, sir.
The guy who has a high end brand in a mall, yes, he's probably earning more, but that tax on his earning would be subject to direct tax, not indirect tax, right? Why should that person, or why should his product be taxed more, is because rich people will come and spend on that product. Yes? And technically,
Yes,
rich should be taxed more as compared to the lower middle class or poor people. Yes?
true. Yes, yes.
Right? So your answer is correct, but the logic behind this is that rich people will spend on such products and not poor people, and certainly the government should collect more tax from the rich people and not the poor, right? It's collecting from the rich and spending on poor, right?
True. Yes, sir.
So yes, the other logic is, for example, again, okay, let me give you logic behind this. Direct taxation. Let me come back to your point as well. Direct taxation,
Okay.
for street vendors, it's high volume, low margin. Do you agree?
Yeah.
For street vendors, it's high volume, low margin. But for high end brand retailers, it's low volume, high margin.
Yes, that's why it's even
Again,
more expensive also.
yeah, but again, both of these
Yeah.
people, both vendors are earning, right?
Hmm. Yeah.
So their income should be, there should be justice in direct taxation. Makes more sense. There is a possibility that
Yeah.
the take home of a street vendor is, and I've literally seen this case, like I've witnessed this case, right? A street vendor
Can you
is
repeat, please? I
earning,
didn't hear.
all right, I'll repeat. I've actually witnessed this case where a street vendor is actually earning more than a high end brand retailer.
Oh.
Seriously, because his volumes were like magnified, like they were huge, huge volume, right? His
Hmm.
margin on, let's say, the per product or per sale margin was very less, but volume was huge.
Okay,
The
so the
moment he
richer richer has
started,
got
like the moment he
people.
opened his shop, let's say he opens his shop at 8 a.m. till the moment he closes his shop at, let's say, 10 p.m., right? A 14-hour business cycle. People don't stop coming to his shop, right? He sells whatever he has, and he's got a lot of inventory and all that stuff. But let's say a high end brand retailer would have a lesser amount of sale. Yes, probably a
True.
more take home, but a lesser amount of sale. So the point is, again, direct taxation falls within the system of, should be more equitable, should be more justifiable, basically, I would say. All right. So, for example, a person who's earning, even a street vendor, right, could earn more than a high-end brand retailer. For example, if you're a brand owner of Forever 21, or you're a brand owner of, let's say, American Eagle or Hollister, right? Sorry, American Eagle, for example, right? Now these brands have gone bankrupt. Okay.
Mm-hmm.
Obviously, a street vendor would earn more than you. Yes. So
Yes,
direct
obviously.
taxation ultimately falls within the ambit of how much you're earning, but indirect taxation falls on within the ambit of how much a consumer comes and spends on your product. So that's the spending power which collects the tax. For example, let me give you a quick example, another example on this. Guys, we're not going to study the syllabus today. I'll obviously tell you what it revolves around, but I'm not going to go into the details of any topic today, because I just want to make sure that you guys understand the system of taxation very well before we dive into the subject matter. Okay. Now, let me give you another example. A business, for example, let's say, um, a small shop that sells, let's say, what do you want to sell? A small cosmetics shop, for
Stationery.
example.
Okay.
Stationery. Okay, fine. That's
Okay.
perfect. A small stationery shop,
Okay.
right?
Hmm.
And then there's a high-end cosmetics shop. For example, they sell, high-end perfumes and makeup kits and all
Yeah.
that thing, right?
Mm-hmm. Yeah.
Now, these two businesses obviously fall on a different, they have a different industry, they have a different customer base, they have everything is different, right? So obviously their business cycle for a stationery shop is different. The life cycle of their product is different. The life cycle of a cosmetic brand is different. A person might buy 5 pencils, 10 pencils, 20 pencils at a time, but would only buy 2 or 3 perfumes at max at one time, right? The life of
Yeah.
perfume is, let's say, 5 years, 2 years, 3 years, 1 year, 6 months. But a life of pencil is what, 1 week, 2 weeks, and then you want a new pencil, right? So the point is that there's a different, the entire thing is different, right? And similarly, for
Yes.
example, these are two different businesses, right? What about when you're employed in different companies in different sectors? That's also a different case, right? But let's stick to this example. So for a business who's, for a stationary running business, right, the consumer over here is not only the rich. Yes.
Yeah. True. Everyone
Consumer
comes
could
there.
be a lower middle class income person, upper middle
Hmm.
class income person, a rich person,
Hmm.
even a poor person, right?
Yes.
Poor does not mean, someone who begs for money. Poor means that he's probably not
Not much
earning
income.
as much as the national minimum wage, for example, or he's
And
at the national minimum wage, for example, right?
like they don't have much disposable income.
Exactly. So again, stationery has a consumer base which is widespread, different types of customers, different income class customers, and the government knows about it. But a high end cosmetics retailer only has upper middle class and rich people. All right. That's true. No lower middle class or poor person would go and buy a perfume of, let's say, Gucci perfume, right? They won't do that. Yes.
Yes. Yes.
Now, the point is, and the government knows about it. There's no doubt, right? The government knows about it. So the
Yeah, it
taxation
does.
on their products, the taxation on the products of a stationary item, of a stationary business versus the taxation on the products of a cosmetics business would be way different, right? It should be different. Why? Because the
Hmm.
power of the spending power of the consumers, the customers over there are, it's very different from the stationery business to the cosmetics business, right? So
Yes,
indirect
it's
taxation,
very
remember this.
widespread.
Exactly. So indirect taxation always depends on consumer spending, the power of the consumer. All right. Remember
Okay, so
this.
it's not about the high end or low end. It's about how much consumers are there.
Exactly. It's about your income class as a public. If I'm the government, I will be concerned about where the rich people are spending and I would tax it more. Because I know I have the capacity to collect. Because, for example, okay, if you're rich and I apply 20% tax, would that affect your spending pattern? No, it won't.
No,
Because it doesn't
no,
matter to you, right? And that's
true.
where the government is targeting right now. In fact, they've been targeting, since the time is created, I would believe. Indirect taxation, this is how it works, basically. You understand? So
Yes, sir.
as a government, my job is to make sure that I target the area where your spending is the most. And even if I apply a 20%, 25%, 10%, 17%, 15% taxation, it won't affect your spending pattern. You will still come and you will still spend on the same brands and the same products and the same items and the same services. Okay?
Yes.
Get it? Now,
So that taking a small percent from a very big amount will not affect much.
exactly, exactly. Now, this is basically difference between the direct and the indirect taxation, and the government obviously has created a mix of the two to make sure that they're running efficiently. But obviously, indirect taxation is a bigger chunk. Why? Because, like I told you, spending and the pattern of spending is restricted, and the taxation on spending basically is restricted to the upper middle class and to the rich people. Simple as that. Okay, but income is earned by a poor person, you know, a rich person, or both extremes of the income classes, right? Yes, there is a possibility, which I'll show you as well, that your income to some extent might be exempt from taxation. So let's say if you're earning, let's say I'll give you an example. Let's say if in UK, if you're earning 12,500 pounds per annum. Per annum means per year, right? Taxation is always per year. Remember this. The government will look at whatever you've earned during the year and they'll tax it. Yes, there are various different ways of collecting tax. I agree. That could be on a monthly basis. But the calculation of tax is done on your income per annum, whatever you've earned during the year. These are little, small points that you need to remember. Okay. So, like I said,
Yes.
tax is calculated per annum. Ways of collecting tax could be different: monthly, quarterly, half yearly, yearly payments. It depends. All right, there are various structures. Now, coming back to the example, so if a person in UK is earning 12,500 pounds per annum, you don't have to pay tax. You're exempt. Your income is exempt. I won't exactly call it exempt. I'll basically tell you the term for it, but right now treat it as exempt. You go anywhere beyond 12,500, you will be taxed at least 20% on whatever excess you've earned. Okay. So, like, this is the basic tax structure of UK, right? This is how the government of UK taxes, right? Now, moving forward, like I told you, government calculates tax for the year, right? Every country has a different year, right? In UK, this year starts from 6th April, ends at 5th April. You might think these are weird dates. Yes, these are very weird dates. For calculation purposes, the government of UK that is responsible for collecting the tax, ensuring that the tax law is implemented, which is known as HMRC. 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 All right, Her Majesty's Revenues and Customs. These the people. This is the part of the government that is responsible for collecting and implementing the tax law. All right, they say, and they've allowed you to round this down, round these dates down for calculation of tax. So rounding down would mean 1st April to 31st March. All right. Now these are just the dates, the days and the months, right? The year that we're studying for is 6th April 2020 to 5th April 2021. All right. This particular year, I'll repeat, HMRC is responsible for collecting tax and implementing the tax law. Done? The tax year in UK starts from, for individuals. This again, like I said, this is for individuals. Starts from 6th April, ends at 5th April. What about the companies? Starts at 1st April, ends at 31st March. For individuals, HMRC allows you to round down these numbers, these dates basically, from 6th April to 5th April. For calculation purposes, you can treat it as 1st April, 31st March. The year that we're studying for is 2020 to 2021. Done? This particular year, for which a government collects tax from the individuals, is called fiscal year. All right. What is it called? Come on, guys.
Fiscal year.
Fiscal year. All right. It's called fiscal year. Understood? Now, this is the fiscal year, like I told you, this is the relevant fiscal year for us, 6th April 20 to 5th April 21. Every year, the government produces a budget, right? And that budget basically is a forecast of how they will spend the money they've earned and how they expect to earn more revenue from obviously the public, right? Or how basically they plan to finance the budget, right? Because like I told you, financing is mainly, I'm again eliminating the business side of the government. Public sector entities I'm going to eliminate. Mainly it's government borrowing from the locals or from international basically organizations, or the main one, like I told you, is tax revenue, right? So every year budget is produced, and every year that budget basically comes along with a new taxation law, right? A revised taxation law. The revised taxation law, I just told you the reason why a revised taxation law is needed, so that the government can basically tell the public how they plan to raise the finance that would be required for the budget spending. Okay, the revised taxation law is comes out in the form of a finance act. All right, it comes in the form of finance act. The finance act that we're studying for is finance act 20. All right, this is applicable, and now I'm going to talk specifically to the exam. This is applicable for June, September, December 2021, and then March 2022. All right, Finance Act 20 is basically applicable for these 4 attempts, starting from June, September, December, and then March 2022, right? So, like I said, the law that will be looking at is Finance Act 20. The year that we'll be studying for, basically for which the law came in, was 6th April 2020, 5th April 2021. This for individuals. For companies, it's 1st April, 31st March. For individuals, the government allows you to round it down to this for calculation purposes. What part of the government? HMRC, Her Majesty's Revenues and Customs. right? You guys understand this?
Yes, got it.
Yes, sir.
Everyone? All right. Now, what I want you to do is just make some small notes. Obviously, I have these notes ready for you guys, right? These are all this is a whole chunk of notes that you guys will get, right? Um, Very systematic, very simple notes, easy to read, easy to understand. But I just want you to make sure that you get these points in your registers. You note it down. I'm giving you guys 5 minutes. Note everything down, the examples that I've given you, the cases that I've told you, right? And then I'll basically talk about the exam structure in a way that how we'll study and all these things. And that will be it for today. From the next class, obviously, I'll start a topic and we'll basically do at least one topic per class. If a topic is smaller, I'll do two topics per class. All right. So I'm giving you 5 minutes. Just note these examples down and everything, and then we'll resume. Overview of what you'll get in the exam, not the questions, not the structure, nothing like that. Just so that you have an idea of what information you'll be given in the exam, and you can obviously use make use of this information. These are the income tax rates. Basically, this is called a tax rate sheet. Okay, this will be given to you in the exam. So, for example, you'll have the income tax rates. Forget about what basic rate and higher rate and additional rate is. I'll obviously explain you, right? You'll have personal allowance. What this, if you recall this amount, 12,500. So it basically is called personal allowance, right? Resident status and all these things, right? You have these notes that I've given. This is just for your understanding. Will not be given in the exam. Okay. Similarly, over here, I've mentioned that these note will not be given in the exam. All right, I've just mentioned it for your understanding. All these things up till where is it? Over here, right? Will be given to you in the exam. Okay, so this is called the tax rate sheet. You'll have this, you'll have access to this, you can make use of this. Yes, by the time you finish the course, you'll learn everything by heart. That I guarantee. But um, in an exam there might be an instance where, let's say, you tend to forget a certain rate. Don't take wild guesses. Don't bet on your memory. Okay, please don't do that. Just go back to the tax rate sheet, confirm the figure, the rate, whatever it is, and then jot it down as your answer. All right. Never take this risk of, especially in tax, because there are a lot of things to remember. There are a lot of things to memorize, a lot of little things to memorize. Even this, for example, the tax official rate of interest, for example, 2.25%. You might make a mistake of calculating at 2.5%. Your answer will be wrong. This mark of using an appropriate interest rate, which actually is 2.25, but you've used 2.5, is going to cost you some marks. All right, and I obviously don't want that from you. Okay, just make sure. Obviously, I'll tell you how to revise. I'll obviously teach you the way to memorize this stuff, right? Because like I said, taxation is probably the this over here is probably the biggest syllabus you have in the entire ACCA. All right, there are a lot of things to memorize. Okay, now I have mentioned these summary notes for you guys. So far, what we have done is this area. I'll keep referring back to the notes as well, because you'll have access to these notes. Okay, so that you can easily link to what you can link the notes to what we've studied in the class. All right. Now, income tax calculation is our topic for the next class, right? This entire thing on how to calculate income tax, what the pro forma is, each and everything, this complete topic I'll do it in the next class. All right. And then obviously we'll go topic by topic. You have property tax, for example, over here. You have interest income, tax on interest income, you have pensions, you have employment, and all these types of different incomes and their relevant taxes. Okay, so far what we've done is the basic understanding of taxation system and these general points, difference between direct tax, indirect tax, and all these things. All right, guys, remember one thing, just a practical case I would like to tell you over here. There are two things, all right, and I'll give you examples as well. And if you know, please unmute yourself and tell me the difference between the two. Do you guys know the difference between the two? This is a very important this is a very important subject matter over here and very practical. Does anyone know the difference between the two?
Yes, I do.
Can you please tell me what the difference is?
Okay. Tax avoidance is basically doing something that will enable you to pay lesser tax by maybe spending more or like investing your excess income somewhere. And
Mm-hmm.
tax evasion is deliberately not paying the tax, maybe intentionally or unintentionally.
Mm-hmm. Makes sense. Perfect. Perfect.
So,
All right. So I'll yeah, you're right. You're on
okay.
point. Your explanation was on point. Let me explain it
Thank
a
you.
bit further. Guys, tax avoidance is where you save tax legally. All right. Tax avoidance is saving tax legally. For example, let me give you a very practical example. All right. I told you that most of the countries follow a progressive taxation system, right? Now, let's say my income per annum is £50,000, but my wife's income per annum is, let's say, £2,000, for example. All right. So this is, let's say, husband, and this is the wife. All right. Now this is a very usual case. All right. If I now, okay, let me give you a more practical case, in fact, which usually happens, and this happens everywhere, by the way. I want to buy a property. All right. And when I want to, obviously, if I buy this property with my money, this property will be in my name legally. I'll be the legal owner of this property. All right. But if I want to obviously rent it out because I want to earn rental income from it, right? Now the rental income, let's say, comes at, let's say, 10,000. If this 10,000 falls in my account versus if the same 10,000 falls in my wife's account, who would be taxed more? Who do you think would be taxed more?
The husband?
The husband, right? Because he has a higher income, right? So the husband will be taxed more. Do I want that? No. Husband, obviously, as a family, they want to save tax. So what this guy will do, he'll basically gift the property money to his wife. This is legal. You can do it. Will this transfer of wealth, transfer of money between husband and wife, will this be taxed? Not in UK. It's exempt. Transfer of wealth between spouse in UK is exempt. There's no tax on it. Okay. So obviously the husband knows about it, right? For example, I know about it, right? So I'll transfer this amount to a certain amount to my wife. Done. And now what I'll do is I'll ask my wife to basically buy this property in her name. So legally she's the owner now. Yes? Legally she's become the owner now. And whatever rental income falls will be in her account. All right? So this will automatically save tax. In UK specifically, this will save tax up to 20%. If the wife does not have any other income, and if I get If I let's say be more specific about it, it can save tax at 40%. All right. This is tax avoidance. Is it legal? Yes. Is it ethical? Because the reason is, ultimately the objective is to do what? To save tax, not pay the tax that is due, that should be due. Yes, you can call it unethical, but it's completely 110% legal. All right, you won't be penalized for it. What's tax evasion? Okay, before I move on evasion, do you guys understand this example? Do you guys understand what tax avoidance is?
Yes,
Yes, sir, clear.
Everyone,
Yes.
Abdullah, do you understand this? Okay, perfect. Now, tax evasion. Guys, there's one instrument in the world that is untraceable. You know what that is? One instrument that all of us have in their wallets. We use it, we spend it, we earn it. It's cash. Cash is not traceable. All right, you cannot trace cash. And that is why, and the new cash, the cash of the digital world is what? You guys know about it. What's the cash of the digital world these days?
Bitcoin.
Bitcoin. All right, that's the digital cash of today. Okay, non-traceable. And this is why you've probably heard, earlier in the, let's say, 2 3 years back, when the Bitcoin was getting its hype, a lot of people, and this was already happening, by the way, and this was actually happening. Okay, it's not a rumor, it is actually happening. Most of the Bitcoin was parked within the dark web, like the underworld, I would call it, for all the illegal activities, because it's non-traceable, right? Just like cash, most of the cash you will see would be with the people who don't want to show their income, who don't want to declare their income, who want to hide their income, hide their sources of income. All right. So, for example, tax evasion, let's say I earn 100,000 pounds in cash. Can anyone trace it? No. Only the one who's given me the cash and I know about it. No other person knows about it. And since he paid me in cash, that means he had it in cash, right? He had that amount in cash. And if he had it in cash and I'm also getting in cash, there's no trace of any transaction, considering that we haven't, signed any document or a legal paper against it. Okay. If it's a verbal contract, there's no trace. Simple as that. This $100,000, these 100,000 pounds, vanished in thin air. You cannot trace it. No government can trace it. All right. You know what I'll do? I'll take 20,000 pounds, declare it in my wealth statement. The remaining 80,000 pounds, and I've actually seen people doing this, I will hide it under my bed. Literally. If you don't, if you don't believe me, go and search Pablo Escobar, go and search Chapo Guzman, go and search, all these drug lords. You can actually see that's obviously there are a lot of crimes involved in that, money laundering and all those other things as well. But tax evasion is one of the key crimes over there, because all they do, even today, the drug lords, whoever they are, they deal in cash, non-traceable instrument. You cannot trace it back. Simple. That is, this over here is tax evasion. I earned 100,000 pounds. I should have declared 100,000 pounds, should have been taxed on 100,000 pounds, but instead, I decided to keep 80,000 pounds under my bed. The remaining 20,000 pounds, I went in front of HMRC, started waving those money bills, and I told them that this is the money I've earned. You can tax it, whatever amount you want to. The rest, obviously, I won't tell them, and they don't need to know about it. Simple as that. You guys understand this? So this is the difference between tax evasion, tax avoidance. Tax evasion is basically saving tax illegally. That's also saving tax, right? But it's illegal. For example, practical cases, under invoicing, smuggling, right? What's under invoicing? I am a business, all right? I'll charge, for example, let's say I sell you a cell phone, right? So the cell phone I sold you is for, let's say, 200 pounds. Okay. Under invoicing would be that the documented price of this cell phone, just to avoid tax, again, it's not avoidance, it's evasion. But the business term for it is avoidance, because obviously a businessman wouldn't say that I'm doing anything illegal, right? The documented price for this would be 100 pounds, or let's say 120 pounds. Although I'll sell it to you for 200 pounds. Where's the remaining 80 going? It's going in my pocket, yes, but am I declaring it? No, I'm not declaring it. All right. I'm only declaring whatever is on the invoice. You understand? This is called under invoicing. Does it happen? Yes, happens a lot. A lot. Okay. And certainly it's tax evasion. It's illegal. All right. You guys get this?
Yes, sir.
Sure. Everyone?
Yes.
Perfect. Just note this example down, and that would be it for today. All right. But make sure that you've noted it down.